I value my time and I'm sure you value your time, so I'm just going to start talking. First up, people ask me how come I don't post how much money I make or how much money I've made on trades or whatever. I purposefully do not do this because I remember when I started, that's what caught my attention and that's what made me want to get into trading, but it gives you a false sense of what is achievable for you. So if I'm making thousands or 10,000s or hundred thousands of dollars in a day, that's not achievable by everybody. And in reality, performance wise, if I have millions of dollars, me throwing my millions of dollars at whatever stock or trade, I'm going to make or lose a lot more money than if I'm throwing hundreds of dollars into this trade. When I'm watching content, I like to see the performance, whether it's percentage gain or over time the returns, not the dollar value, because that's meaningless to me. I don't have any concept of what it's relative to. How much money does this person have in their account? Or how many trades does this person make? If I'm in sports and I'm shooting on goal, or I have X amount of points in a season, what is that relative to? Is that out of 1,000 different shots on goal, I've had a few hundred? Or is that I've only had a few hundred shots on goal and I've made a few hundred? So I think it gives a false sense of what is achievable, so that's why I don't do it. And I would strongly caution you following people that do heavily enforce this. This person made X amount of money yesterday. This person made X amount of money last month. Be cautious when you receive this information because it's not always as it seems. The next thing that I would like to caution you about is language. So when traders are using language like estimate this, or this movement is strange or weird, or this always happens if this is the scenario, this is always the outcome, I hope, or you hope that this will happen. This is all speculative language, and it is in no way meaningful. As an example, when you're trying to learn something, this does not give you an answer. This just is a vague description of a scenario. If I'm saying I hope this or I estimate this, why? I remember when I started trading, that's what I was so confused about, is I would see all these people that were successful day traders and I wanted to learn from them, and they would use this language to describe the reasonings for their trades and following patterns and whatnot. And I would continually ask why. Well, why are they saying this? Why is this the way that they're describing it? Why do they hope? Why does this always happen? And I could never get an answer. So when I was building stock mines initially, I just went right from the root, bottom up, learned everything from the bottom up. What is the stock market? How does the stock market work? What variables cause movement to occur? You have your market cap, your float, the number of shares available. And then when you have a specific market cap and float, depending on how much volume is traded, i.e. how many people are buying or selling this particular stock, this will cause the price to move a particular way. So then how can you use this information to benefit you when trading? How people will try to sell you in courses or encourage you to learn is by just looking at scenarios over and over and over and over and over again, which I can understand. You need to practice something if you want to get good at it. But this industry seems to be in a repeat cycle where this is always what's happening. It's not a matter of somebody has learned something and then they impart that knowledge and then someone else can then not have to do the same thing. But instead, it's every single time somebody learns, they still have to go through that same process, which is inefficient to me. So when I built stock mines, I figured, well, firstly, a computer can look at more scenarios than I can and better understand these scenarios than I can. So if I write an AI that can take into consideration the market cap, the float, the volume, previous movements of a stock, then it can better predict a scenario or identify a scenario than I can, which is exactly what it does. So why would you continually look through all of these scenarios, like webinars or course videos, DVD videos, whatever different way they're trying to give you this content? Why would you watch over and over again these ways that these people identify trades when you can just have a computer do that for you? I don't know, beats me. As someone who's been a part of this learning process, I initially went through this entire learning process of trying to be a successful trader and listening to these different courses and videos and recaps and whatever. I realized that a lot of these people will have a strategy, but then if something is fitting a strategy or fitting a pattern or meets criteria and it is a trade, and then if it follows through and it does as they expected, then they will say, see, I told you so. But then if there's situations in which the outcome that they wanted did not occur, they will identify it as an outlier. This is not how it's supposed to move. But why? That doesn't make sense to me, because there's a lot of outliers if that's the case. Whereas if you look at it, if you reframe your reference so that, or your perspective so that it's not a matter of it being an outlier, it's a matter of it being a part of it, then it would make more sense. If this strange movement is happening over again, then it's not really a strange movement. As humans, if we have set these criteria and these parameters and have an expectation as to what's going to happen, then we're going to look at everything that does not meet that expectation as wrong. It's not supposed to do that. When you have a computer doing these things for you, you eliminate that aspect. So anytime there is an outlier, it will consider that as this is how movements happen with this specific criteria or these specific parameters, these variables, which is another reason why I would say having a computer do these things for you is much more beneficial than having you do it yourself or copying someone else's trades. Sure, StockMine's AI provides trades, but these aren't my trades. I take these trades because the AI is giving them to me as well. Another aspect that I found was very common amongst the people the professionals out there that I tried to learn from was that they would provide an analysis as to why they made a specific trade, but then you could go to someone else and they would provide an analysis that was the exact opposite to what this person made, and they're both successful. So you end up having information that contradicts each other or one another, and then it confuses you even more when you're getting started. So why try to figure out all of that information yourself when, again, a computer can just do it for you? Another thing that I frequently see is groupings and what these groupings behavior is supposed to be. So if you have a market cap where you have a micro cap or small cap, medium cap, large cap company, which is this dollar value to this dollar value, 10 million to 100 million, whatever the case may be. These groupings, sure, they're good for organizing data as humans, but when you take a step back and pretend these groupings don't exist, really you just have a big spectrum of numbers. You have anything from $0 to billions of dollars. So grouping and saying stocks that are 10 to 100 million will behave this way in this scenario isn't a fair assumption because you also have other variables to consider. You have float, you have volume, you have price movement. There's so many other factors to consider. Really, the way that you should be looking at it is, I mean, if you have some sort of a math background, it's like a multi-degree polynomial with each variable having a different weighting and effect on the system or the outcome of a scenario. In simpler terms, it's a math equation with lots of variables, not just one variable that causes a specific outcome. And as humans, or as most people, because a lot of traders are unsuccessful, we're not good at being able to consider all of these variables to then imagine or estimate an outcome. Again, why I decided to make stock mines. But then another aspect to that is because there's such a large percentage of people or traders that are unsuccessful, they're not profitable. If that's the case, then all of these traders out there that are unsuccessful would have to be following professionals or people that are selling courses online, or the majority of them would be either doing that or developing their own strategies by having learned some content from these people and concepts from these people. So if that's the case, why do people continue to follow this trend? I'll leave that one in the air. I had mentioned in a previous video that a point which I'm going to say again because I think it's very important. If you're trying to learn something, or if someone is trying to teach something, generally the purpose of that teaching is so that the person learning does not make the same mistakes that the person who's teaching made, or accelerate the curve to being able to accomplish a task. So somebody designed cars or computers so that you don't have to. You don't have to know how computers work or how every aspect of a car functions in order to benefit from it. Another example would be someone had to be poisoned by lead in order for us to discover that lead's poisonous. And now that we know that lead's poisonous, people don't have to be poisoned by lead to know that it's poisonous. But then for some reason with day trading, the curve is never accelerated. And if anything, the mistakes that people teaching have made, the people learning continue to make. So if you find yourself having to watch thousands of hours of content or relive the mistakes by watching the specific trades that other people have made, try to take a step back and recognize these moments, because chances are you're not going down the right path. Now, if you find yourself getting valuable information or densely packed content telling you exactly what you should not do or should do, and very explicit or detailed reasonings as to why, then that is probably closer to going down the right path than not. I'm reminded of videos that I remember watching when I was learning of traders identifying patterns. So let's say it's market open and they say that if it dips down, the price dips down, then that's when you would buy for it to then spike up with stocks that meet a certain criteria or a certain market cap or a certain float or whatever, or are gapping up a certain amount of a certain percentage in the pre-market. But then I would see them say that you have to read the level 2, you have to read the orders that are coming in, or this candle or this situation, it's moving up past this point of resistance or support. But then anytime I tried to get more information, well, why is that a point of interest? Why is this the time to do it and not this time? Why can't you identify that earlier? There was never any answer. And the descriptions for these patterns were very vague. So that's why I set out to want to identify more strict information. If this price comes down to below this point, it is within this range, then you would buy if it comes back up to this point, in which case you would sell at these prices. So I made it so that whichever patterns that are given, there's more strict information as to when the trade should be taken, which is extremely beneficial because then it takes out all this speculation and accelerates the learning curve significantly. And I know I've said it in a lot of different videos, but StockMinds does not follow a specific pattern. For the main trades, because now it's grown to provide a lot more information, for the main trades, come market open, there is a probability that the stock will move up or move down. It provides this probability, and it provides a trade for either of the scenarios. If it moves down, this is what it's predicted to move down to. This is when you would buy, this is when you would sell, this is your stop loss, etc. Or if it were to move up, this is what you would do. So it's not, the time frames can be different, the sizes of the movements can be different, the market cap, float, whatever, all these variables can be completely different for the stocks that come up. It's a matter of probabilities and the size of movement, because as I mentioned earlier, it's the performance that matters, not necessarily the dollar value the dollar return that you get. Because I've seen so many people out there who trade Forex or trade options or even stocks that'll say, I made $40,000 today or $10,000 today or whatever. But then I look into more details of it, and it's 1%, 2% gain. Well, that's not useful to me because that happens constantly everywhere. So how can I maximize the amount of return, the percentage return that I can get in a shorter period of time, which is what StockMinds is designed to focus on. High percentage returns in a short period of time so that you don't have to trade, you don't have to sit in front of your computer for a long time, but then you can also very quickly grow your account if you have a small amount of capital. So you don't have to worry about having hundreds of thousands of dollars to get the returns that these people are getting. You can get significant returns and grow your account because of the percentage returns that StockMinds provides. I had mentioned support and resistance at some point earlier, and it made me think of another point that I want to mention. Support and resistance is relative. So whenever someone says that this is a support level, this is a resistance level, that could not be a support level or not be a resistance level depending on the parameters within the situation. So if you have, let's say the market cap and the float remain the same, then a support level or a resistance level is no longer a support or resistance level if the volume changes. If you have an extremely high demand and you have a resistance level of $4, then that is no longer resistance if you have significantly higher volume than whatever this resistance level was established with. Now, this might be getting a little bit too technical for some people, but the point that I'm making is support and resistance are, depending on the time frame, the amount of volume being traded, the market cap, float, all these variables, they exist or don't exist, these support and resistance levels. So why consider them at all if there are plenty of situations in which they exist and do not exist? Really, you want just, this is the predicted outcome of everything. This is the predicted of changing variables, such as the price and the volume. If you have an idea as to how those will be in the future, or what is very likely to happen in the future, then that is much more beneficial information than knowing a key support or resistance level. Realistically, if you know what's going to happen in the future or what will be what is highly likely to happen in the future, then you should be able to enter orders to buy and sell before the outcome happens, and then repeat this and be profitable because you know, or you have a good idea as to what's going to happen. As soon as it's not that, if you have this strategy or this trading style where this is not the case, you can't do this and be successful, then that means that there's a huge human element to the process. So you need to be able to personally identify points to buy or sell, or areas to put a stop loss, or how big the movement is going to be. A computer is way better at that than I am. So why would I rely on myself? And if 99% of traders are unsuccessful and you have a successful strategy, but these people are still not making money, then clearly the aspect that is ineffective is the human element, the actual execution of this strategy. So take out that human element. Again, another reason why I created Stockpoints in the first place. So I don't know what you would call this, whether it's a rant or answering questions that people have given me, but to answer some of the questions that people have given me, why don't I just do this for myself? If it's such a successful strategy, why don't I just do it myself? I do it myself. Really, it comes down to fulfillment and satisfaction. If I have just made something and it makes me money, then that's good, great. But helping others to do that, at least for me personally, I mean, some people may not get it. I get fulfillment out of helping others to make money. And I think that that's extremely important. There needs to be people out there that teach or help. But exactly what I had talked about before, I know the learning curve that people can have within trading based on what information is out there. And I know that a lot of people are unsuccessful. So I want to rectify that. I want to have more people be successful. And I want to not have people make these ridiculous errors and waste their time. Simple as that. I don't know what you would call this video, but hopefully you get some benefit out of it. Hopefully this information is valuable to you. And if you made it this far, then thanks for watching.